Hello, everyone. Andrew Seeker here. Thank you for taking time out to watch this video. And this morning, what I thought I'd do is go over the 5-minute property analysis, but this time I'm going to do it in more detail. I'm going to do a deep dive on this. And so I'm going to just basically start right from the beginning and just kind of talk my way through a property. Okay. And this way you can see how I do it in real time. Now, please understand that this takes, once you do this a few times, like about 10 to 20 times, you'll be really good at it. And then it'll take 5 minutes. But for the sake of explaining all this to you, it'll take a little bit longer. So please understand that. All right. And then also, I just have a couple metrics that I use that I might want to point out um, that I personally use. You can, use them as you feel fit. If you like it, fine. If you don't, that's fine too. But here are a couple things that I use. Okay, so when I look at a property, the first thing I'm going to look at is the sales price. And then once I see the sales price, if the rent rolls or the gross income and net income are not stated on the offering memorandum or on the website where you see this property, and I'll show you an example here in just a minute, then what I basically do is the first thing that comes to my mind is the 1% rule. The 1% rule is basically you take 1% of your uh, of the sales price. Okay, so let's say for the sake of simplicity, excuse me, that we are looking at a $500,000 property. Okay, whatever it is, fourplex, eightplex, whatever, what have you. Just $500,000 is our amount. So you take 1% of that. What is that? $5,000. So that means that your rent has to be at least $1,000, or I'm sorry, $5,000 a month from whatever unit it is. Okay, so if you have a fourplex, then let's see here, what is 5,000 divided by four? $1,250 a month per unit is what you need to be getting for rent. Okay, so of course, if it's a $400,000 property and it's a fourplex, that's $4,000 a month that you need in rent to make the 1% rule. And so that's $1,000 per month per unit. Okay. So that being said, once I discover what that gross rental amount is, I'm going to take out 10% for vacancy. So that's basically what, $400 a year. So that leaves me with what, $3,600 a year. And so you want to definitely calculate and figure that in. Then I'm going to use a 50% expense ratio. Okay. So it has to be 50%. So cut whatever you have in half. So let's say that this property is generating, well, let's say for the sake of argument, it's $60,000 a year. So I'm going to take half of that, $30,000 out is going to be for expenses and your taxes and your insurance and capex and all that kind of stuff. And then the other 30% is going to be your net income. Now, understand too that there is a difference between net income and effective net income. Okay. So the net income is where you're going to try to discover where and how much you're going to be paying on your mortgage, on your finance, on the loan on this property. Okay. So then if it, we'll have to try to calculate it and see. But since this is just a 5-minute evaluation, I'm not going to go deep into the debt service coverage ratio calculations. That requires a special calculator for that. And I do have an online or, a spreadsheet that I have that I can calculate those numbers. So if we have enough time, I will do that for you and show that to you. Okay. So let's go ahead and get going here. So I'm going to show the screen. Oops. Okay. Share. And I've got a really, really tiny screen. I don't know why. I hope this shows up okay. All right. We're going to go to, I'm going to click on new properties. That's what I have here. This is my folder. And as you can see here, I have several different properties. Anything that goes over a month You know, these are all the properties that I've done due diligence on for property analysis in the past. They either sold or they just didn't meet my requirements. And so they all go in this folder, so I can always come back to it later if it does go back on market again. All right, I'm going to take this top one. This is an active one that I'm looking at. Here's once again, we're going to take a look here at the well, let's see here. This property, let me take a look at the soft term sheet. Let's take a look there. Oops, I didn't even fill that out. No, 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 no. That's not a good thing. All right. This is a fairly new one. Let me try the property analysis term sheet. Okay. 10-minute offer. Let's take a look at this. I didn't do that one either. Well, poopy. Let me try something else then. I'm going to go back to one that I did take a look at recently. Let's see here. Um, hmm. Yeah, it's kind of surprising. I thought I had started that one that we just took a look at, but I see we did not. So let me see if I can find one here that I'm familiar with. Let's let's take a look at oh, let's take a look at Tumwater. This one here. So we have a term sheet here. I'm going to take a look. Well, no, let's take a look at the info first. I usually copy and paste or at least take down some information on the listing or the website. You know, I'll copy and paste the offering memorandum or whatever the description is. So here we have a 6-unit apartment building in Tumwater, Washington. Their asking price was $1,250,000. And 1% of that is what? Let's see here. 1,250,123 times 1%, $12,500 a month. So if I have $12,500 a month and I divide it by 6 units, that means that I have to be making $2,083 a month per unit to cover the rent. $2,083. Now, depends on, okay, well, we see here these are 2-bedroom units. Okay. So I'm not sure in that area. Yeah, you might be able to get that kind of rent. But here the rents are given here. So the unit details. Okay, so we see here that everything here is under $2,083 a month for all 6 units. So obviously it's not going to make our 1% rule. So if I take, once again, if I have the total rents of $9,050 a month times 12 months, I'm making 108.60. I'm using a 40% expense ratio in this one. So that's 60. That gives me a $65,160 NOI. I used 8.8%. This was taken back in March or February, March this year. So I used a little bit of a higher interest rate, and I came out with monthly payments of $81.87.24 and an annual of $98,247. The debt service coverage ratio, according to my calculator, is 0.663. I need at least let me add this in here. Need at least 1.25% to meet the ratio, right? So we're way below that. So automatically, I tell myself, nope, I would not buy this property, not based on these numbers. Okay. So once again, I know I kind of talked you through this. We went through this real slowly. Oops, what's going on here? I didn't want to stop sharing my screen. I just wanted to increase the size of the spreadsheet here. So yeah, I would not purchase this at all because we would need to make at least, you know, if it was interest only, I'd be paying 124,320 a year or 10,360 a month. And you can see here this little calculator here. I factored in a 20% down payment, 8.8, and it kind of spits out some numbers here on theirs. So let's see here. Yeah, it would be 8,187 a month. But remember, our total rents here are 9,050 a month. So that's barely enough to pay the rent that they have here. Okay. So let's see if I can use this pen. Oh, good, it works. Okay, so this is the first time I don't have too much experience using these special features here on Zoom. I'm usually an attendee, not so much a host. So please bear with me here as we go through this. Okay, but as you can see here, the 9,050 a month, 8187 barely gives me enough room. Again, we're using a 40% expense ratio because you have to factor in your taxes, your insurance, your CapEx expenses, and what have you. So, yeah, to me, that's a very, very narrow margin. You might be able to get, that might be about 1 point. Let's try it here real quick since we're at it. So I have 8187 a month, and I'm going to divide it by 9050. And that comes out to be a 0.9% debt service coverage ratio. So I still don't have enough cash flow to satisfy a lender. Okay. So a lender is going to look at this. Their underwriters are going to look at this and say, well, no, because once again, we need 1.25 and we don't have it. We do not have 1.25. We have 0.9, even if we're using these, according to this rent here, the mortgage principal and interest. So again, it behooves us. We need to pay close attention to that. So that's it right there. Okay. As far as this is concerned, this property is concerned, we don't, we don't need this, or we can't afford this property. So let's see here. I'm going to go ahead and close this one out. You're not going to save that. Let's go take a look at another property. Let's see here. Let me try to find one here that I've looked at recently that I know a little bit about. Okay, I do like Anchorage, Alaska. I've been looking at a lot of properties up there. Let me see if I can find one here that, oops, I don't know. How do I get rid of my little circles there, my markings, annotations? Oh, let's take a look at this duplex. Okay, in Longview, Washington, just up the street from where I live. Okay, so here's one. I emailed this other investor that was interested in this duplex because I was interested in it myself because they said that there would be a possible seller carry, but the seller would like 100,000 down. Okay, but it's flexible. The monthly payments have to stay at the current amount, which is 1,700-ish for the remaining term of approximately 4.5 years. And then the buyer will have to cash out the seller. The interest rate is stated as a low 3.5%, depending on the structure of the offer. Yeah, I don't know. This one didn't pan out for me either. I don't know. Yeah, I do remember why, because their asking price was astronomical. They were asking, I don't know, 450,000, I think, for this one, and the rents, of course, in this area are nowhere even close to that. Let's see here. Take a look at my soft. I don't know if I did a soft term sheet. Yes, okay, that's right. It was 450. So I kind of put this all down here. If we gave them 100 down, our payments would be 1556. Our PITI would come out to about 2,000, roughly 2,000. I'm not sure what the rents were on this. I don't think I got that information. But you can see here, I try to put in the estimated fees. A lot of this stuff I'm not going to know until we actually get a contract, get it under contract. We have a title and escrow company to work with, and they'll help us calculate all these other fees here. Let's see here. I have my notes here. So the sellers says that they have 440 a month, fully occupied, willing to carry the balance of 350 plus $3,500 permit fee. And that was to add a fourplex. It has updates, mostly interior. Okay, so we have a little bit of information here on the property and what the seller is willing to do. You know, I don't know. I took a look at this and I thought, no, it's a little overpriced for me. Seller is willing to carry, but again, I'm kind of wondering, okay, so here we go. We do have rents. So the total monthly rent is 2020. So that would be 24,240 a year. Once again, I took out expenses. We know that I think the 440 and whatever was given, that's what I used. And we have a net operating income of 18,960. Let's see here if I can get this. Let's see here. Once again, I did the numbers here. 19. Let's see here. Let me go back here. That was monthly of 2020. Okay. So on the term sheet here, we have a monthly annual payment interest of 1556. Okay, but when you add the taxes and insurance, it comes in 1956. So 1956 minus, or I'm sorry, that was 2020 a month minus 1956 comes out to $64. So after we pay our mortgage off our rents, we have $64 left over. And that does not include CapEx, property management, utilities, landscaping, what have you. There's other expenses involved when you own a property, see? And so you have to factor that in, but you can easily tell just by this one that it's not going to cash flow for you. You're not going to make any money off of it. So again, the solutions would be to come in with more money, or even put down more than 100,000. You could raise the rents on these people because it looks like their rents are probably a little bit below current market. But I don't know if you could, knowing the Longview area, I'm not sure if you could pull off a $100 a month increase suddenly as a new owner and jack those rents up from, what did we have? 1,200 to say 1,300 a month, and this 820 to 920 a month, right? $100 per unit. It's still, yeah, it's not really a good use of your money. I don't see a whole lot of good leverage in this. I'm gonna pass. Okay, well, I did already, but let me see here. Alaska properties for myself. Oops, okay. Well, I'm trying to buy some raw land out in the middle of nowhere. So um so you're probably not going to be interested in that up there in Alaska. So I kind of want to just build like a second home or log cabin or something and hide out up there. Let's see here. Yeah, it's been here about a week ago now since I updated this last. I have to go out, take a look at other deals now. So let me just quickly run through one more. All right, let's see here. Let's take, it's a hotel project. Juno Street. Oh, yeah, this is one I took a look at recently and I really, really liked it. Okay, I liked it so much that I actually did have a letter of intent to purchase. So this one was 420. Or no, this was no, that was their asking price. So it came out to about a 5.53% cap rate. I did my 50% expense ratio. I took out my 10% for vacancy. So I came up with my net annual income, my operating expense, or yeah, uh, operating expense ratio of 50%, net operating income 23,220, and I calculated that at 8.5% interest, came up with monthly principal of 2553.55 or 30,642.60 in annual P&I, principal and interest. Debt service coverage ratio only came up to 76%. And remember, I need a 1.2 or preferably a 1.25. That's pretty much yeah. So this once again is a deal killer. This isn't going to work for me. Okay, this property has a debt service coverage ratio of only 47%, meaning that the monthly payments are just over twice the net income. This property is not financeable using the rates, terms, and the price above. The net annual income would have to be 44,000 to meet most lenders' 1.2% debt service coverage ratio. There are three options for this property. One, lower the sales price. Buyer, that would be me or whoever, to put down more money, or hope that the appraisal comes in low enough to meet the debt service coverage requirements. And another possibility would be to raise the rents. So see, you can see here, once, as I mentioned earlier, once you've done this a couple times, man, it's really easy. You can knock this out in 5 minutes. But again, just to recap, all you really need to do is just when you just look at the sales price, then you calculate or find the gross income. You cut that in half, use 50% as your expense ratio to come up with your net operating income. And then you compare the net, you'll have to have a special financial calculator to figure out your monthly payments. But I would just, I would use a calculator, but even off the top of your head, use that 1% rule. If it's, if the rents don't total at least 1% of the asking price, then just walk from it. Or if it looks like a really good property, like everything's all up to date, new roof, new kitchen, new bathrooms, new appliances, then you could possibly take a look and see what the current rents are and see if they're up to market. If they're not, you might be able to have some forced depreciation by raising the rents. You could, know your area too. Determine if raising the rents like $50 a month would be a needle mover for the tenants, or even $100 a month. You might be able to get away with it, depending on how much the residents like the area and don't want to move. And it depends on the area and the market rents and other factors. So you want to be really careful with that. All right. So I think I pretty much got it all. So I just want to thank you for watching this video. If you have any questions, please contact me. I didn't prepare any PowerPoint slides today, but my information is pretty easy to find. You can just post in the bottom of the link here, or if you're finding me on LinkedIn, you can look at my LinkedIn profile and get my information there. But anyway, yeah, feel free to reach out to me if you have a property you want some help with. I'd be happy to do this if you're willing to put it online and or happy to share this and share your deal with all of us and the viewers. That would be great. I would be happy to do this. This would be good for you, good for me, good for everybody that's attending. All right. In the meantime, I just want to wish you guys all the best of luck, and hope to see you guys around soon. All right. Bye now.